it's Toy Holiday, founder of the Toy Holiday Real Estate Team, servicing customers from Los Angeles to the Inland Empire, Riverside, and Orange County. If you are looking to buy, sell, or invest, please give us a call at 310-684-3811, or you can check out my website at www.toyholiday.com. So today we have James Merrifield, a friend, a colleague, an amazing person. He is also the author of #1 book called Defying the Odds. Did I get that right? Defying the Odds, Becoming the Best Possible You, No Matter the Cost. And James is also a representative for New York Life Insurance. And so today we are going to be talking about mortgage life protection. So you've purchased your home, right? And you're so excited you move in. Now what? So I have James here today to tell us a little bit about mortgage life protection. And so before we get started, I want to tell you there's two different types of mortgage insurances. You have the mortgage insurance that protects the bank, the lender, and then you have mortgage life protection insurance that protects you as the borrower. So today, James is going to talk a little bit about mortgage life insurance and how it can help you today. Okay, James?
Well, thank you, Toy. So thank you for having me. It's been such a warm introduction. You know, Toy is always just so warm, and I feel good being here. I feel like she's here in my room with me. You know, and I'm telling you, you know, I'm really grateful to have the opportunity to speak today. So what basically just in perspective to what Toy is talking about, you know, we buy this home, and let's just say we're a new couple, and we just picked up this beautiful home, and you know, it's a big deal, right? When you bought your first house, it's a big deal. You know, even when you bought your second house, or maybe it's your third. But anyhow, we've got to talk about mortgage protection. Now, no one ever sees these kind of things coming. No one ever anticipates the worst of the worst coming, but we're going to talk about it today. Now, just for an example, you know, the millennials right now, I know they're really hot right now. And as far as, like, you know, in the real estate market, well, they're the new thing, buying up everything. So you've got this 35-year-old couple, you know, they're together now, and, you know, they bought their first home. It's their dream home. And they also have plans on top of that dream home. They want to buy, you know, they want to have children, and, you know, they want to start their family. And this is the start of something beautiful. Well, fast forward to a couple of years, these are things that do take place. Let's just say, you know, a Sally meets Tom, and, you know, they have a couple of kids, and they're living their dream. You know, one day Tom walks out the door, says goodbye to his wife. Goodbye, honey. You know, I'm going to work. Give the kids a kiss goodbye. Mm-hmm. And Tom doesn't walk in the door ever again. You know, Tom passes away prematurely. His wife is at the house now, and she's raising, you know, the two children on her own. There's something big that we have to figure out, like, right away, and that is, how are we going to pay this mortgage? You know, because I would imagine that they don't have excess amount of money in the bank that are just basically gonna, you know, she's gonna be able to live there for the rest of her life. And without a good plan in place, the chances are she's going to lose that home. She's gonna have to go back and maybe live with her parents, or, you know, maybe live with a sister, that sort of thing, until she figures it out. All of this can be prevented by taking the time and talking to a professional like me. This is where I come in. Mortgage protection is very, very, you know, it's common in today's, it's common in today's world, but it's not common enough that people would take the actual time to really think about it. Just for example, with some simple math, if we bought a home, you know, we bought our first home for, let's just say, $500,000, mm-hmm. and we dropped maybe, you know, that 20, maybe 40% down. Chances are we're still going to owe about $400,000 minimum on that home. Now, in the event that if Tom were to pass away, and if he would have had some mortgage protection, let's just say for about $500,000, Tom's health is pretty good. He got insured for $500,000 at 35 years old. Something like that would probably cost about, let's go to say, I think it's safe to say about $100 a month. Mm-hmm. That $100 a month is going to give that family peace of mind, so that they know that in the event that one of them doesn't come home one day, it's going to be okay. They're going to be able to pay off that mortgage. They're going to be able to stay there, you know, and you know, for those of us that have been in a situation like that where somebody did pass away, we do this massive fire drill with, oh my God, what are we going to do now? You know, because we didn't plan for it. We've got to get more sharper with planning for these kinds of events, because once again, nobody expects for the worst to take place until it happens and it's too late. So simply putting that mortgage protection in place is going to prevent, a situation like Tom's wife having to just pack up and leave everything that they worked so hard behind. Now, getting into the second piece of this, Toy had talked about, a mortgage that basically is going to protect the family. Basically, what we want to do on top of that is there are different types of coverages, different types of insurance plans, different kinds of coverages that we can do that are going to benefit the family. It's a matter of coming up with a custom, and when I mean custom, I mean a custom design plan just for you. So nothing cookie cutter. This is not a one size fits all. No, a customized plan specifically for you. So that way we make sure that now all bases are covered. Not only do we have the mortgage protection, so that way Tom's wife gets to stay in the house, but on top of that, we put together what's called a layer of protection, okay? We add a layer, so that way we also have a little bit of death benefit, but we also basically have a pot now that we're starting to grow to where we're accumulating dividends on an annual basis, okay? A simple plan like that would be considered what would be called a custom whole life policy. Mm-hmm. What that means is that basically for that 35-year-old couple, let's just say they wanted to retire by the age of 65. So what we do is we basically put a policy in place for the next 30 years, okay? Real simple math. They would put in excess amount of dollars, just a certain amount based on whatever's in their budget, okay? They put that money in on a monthly basis to make sure that not only did they have a little bit of death benefit right there on the side, so now we got more coverage, but on top of that, we're also saving up and stacking up for our retirement. That being said, that money that's in there, because we're paying with that with after-tax dollars, we can pull that money out anytime we want tax-free. That means that if you see another home, and it came time where we're all there, we've owned our first home, and now it's time to get that investment home because we want to start working on our retirement. That's where that money comes into play. We can pull that money out tax-free, and now we have a down payment for that second home. And I'm not even talking about second home. Let's just say that family wants to go on a vacation now. Yeah, you can take out whatever, $5,000, $10,000. Let's go fly first class to Hawaii. Let's go stay at the Four Seasons. Let's do it up. You have that money right there. When the kids have major events, kids, there can be a major event to where, maybe it might be time to buy that first car. Maybe it might be time to purchase, for us in our family, we have what's called a quinceañera for our daughters when they turn 15. Hey, you're able to pay for that big party tax free. It's beautiful. There's nothing more better than tax free money, right? So
I like that. Yes.
We have everybody loves tax free money. I know I do. If I can be tax free all day, I'm doing it.
Yes, absolutely. So I want to also talk about the types of mortgage life insurance. I was reading that there are different types of mortgage life protection. Like some they'll pay out to the surviving wife or husband or surviving partner, and then they also have some that will pay directly to the bank. So can you explain a little bit about that?
Yes.
Okay.
So I think just going back to what Toy's talking about right now, we do have several different types of insurance, but I want to focus in on that mortgage protection.
Yes.
What we can do, ladies and gentlemen, you'll have that a 7-year fixed mortgage. You'll have that 15-year. Maybe you'll have even a 30-year fixed. Whatever was the deal that you decided to go with, based off of your budget, based off of what was going on up here at the time of signing the dotted line, we can provide you. Let's just say if you had a 7-year mortgage, okay, we can do a 10-year on that. We can even do a 7, but we can do a 10-year to make sure that for that 10 years you're completely covered in the event that something should go wrong. So you would be able to pay off that mortgage in the event that somebody passes away prematurely. Same thing for that 15-year deal. If you sign on the dotted line and you've got 15 years to go on this thing, okay, like we cannot have anything less than 15 years worth of coverage, because we need to be smart and be prepared that in the event that if something went wrong, God forbid, somebody didn't come back in the door and passes away prematurely, your other half doesn't get the rug pulled out from underneath them, and they're able to pay that mortgage off in one shot by having the proper protection. Now, that being said, I know some of you out there are saying, James, well, that's cool that you can do that for the 7-year and the 15-year, but what about people like us that have a 30-year, a 30-year fix? Yeah. What about us? How's that going to benefit us? And that I have a solution. What we can do, we can write up to a 30-year a term. It's called a 30-year term. Basically, what will happen is, for example, if you owe $500,000 on that home that you just took out a 30-year mortgage on, okay, we can write for 30 years. We can cover you for the next 30 years. You pay X amount of dollars into this thing, so that in this policy, so that in the event, that once again that somebody doesn't show up, hey, we're going to make it to that 30 years. We're going to get there. And we're not going to lose it. It would be a catastrophe to get to year 27 and something like this takes place and we don't have the right coverage and we lose everything that we work for. And we've seen these sort of things. Toy, I know you've seen it, to where someone's got to go into and do a short sale. So this thing's going to go into foreclosure. And now you're in panic mode, because we don't have a good plan in place. We're looking for an investor. We want somebody to come in and take this thing off our hands. We want a deal where we can get, some equity out of this thing at the closing of the deal, so we can walk away with at least a little something. All of that can be avoided, okay, if you just took the time and went out and got yourself, a term insurance coverage for 30 years, okay? So we can do that. We can do a 10, we can do a 15, we can do a 20, we can do a 30. It's based on, once again, everything is custom tailored to fit your needs. Now, Toy was asking about the other side of the death benefit, Toy, where basically we would have some cash. We would have some cash left over. We'd have some cash money left over. Is that what you're asking, Toy? Like after the mortgage is paid off? Is that what you were talking about?
Yeah, I was reading, but you can't believe everything that you read online. But
no, you cannot. That is true. That is true.
That's why I have you on here, the professional, yes, to talk about, the different types of mortgage life protection. And so it was basically talking about the different layers. So you have one type of mortgage life protection that will pay the person directly out. And then you have another one that will actually to pay you directly, but then there's one that was explained how it will pay the money to the bank instead of directly to you. I don't know, is that false, or is that like
that Toy, going into that just in full details, that is false. Okay. That is false.
See,
basically,
you can't believe everything that you
read. No. And it's very unfortunate that you really have to check all of your sources. You can't always just go on your search engines on your phone and believe every single thing that you read on there. What you want to do is you want to seek counsel from a financial professional like myself, to where we have a strong army, we have an entire team, we have an empire, of financial professionals and advisors, that basically can help us out. So if there were ever anything that where we couldn't answer, we didn't have a direct answer for, we have access to it, like in a matter of minutes, not days, not hours, but in minutes. We can get that information and get the facts straight.
That is so amazing. That is so amazing. And so you actually answer a lot of questions that I had. So I just let you talk. I'm like, oh, wait a minute. He just answered that question. He just answered that one too. So James, you are on it. So guys, this is James Merrifield. He is with New York Life Insurance. He's been doing this for years. He's not only into selling insurance and helping you with your life, but he is also a motivational speaker. He is an author. He is a dad. He is a brother. He is just this amazing guy. So if you are looking for life insurance, mortgage life protection, not just mortgage insurance, because the mortgage insurance that's included in your monthly mortgage, that protects the bank. That does not protect you. It protects the lender. So you want to think about mortgage life insurance / mortgage life protection insurance. So you want to give James a call. He is amazing. And James, I want you to go ahead and plug in your website or your phone number or your email address or something like that. And then I will also include that at the end.
You got it. No problem. Everybody, you can go ahead and reach out to me at area code 714-866-6778. That's 714-866-6778. You can actually Google my name and just put James Merrifield, and I think I'm the very first person that pops up on that thing. And like, I'm right there. You'll see James Merrifield with View of Life. You'll see the book cover right there. You'll see me on there with my kids. So Google knows all about my business. You can get on there.
Yes, absolutely. So James he's just when did we met at an investor seminar, right?
Yes, we did. Yes, we did.
Oh my God. I met you and I met another gentleman, and oh my God, these guys, man, James, but I've stayed in contact with you, James. You're just awesome. So Defying the Odds. Okay. You need to get his book. If you don't have it, you need to get it. If you're looking for, I'm just giving you a whole plug-in, right? So if you're looking for somebody, for your upcoming event, a men's event, a women's event, and your school event, you need someone to come out there and talk to your kids or, to your audience, you need to get this guy right here. And he's local. He is in the OC. He is local.
Orange County.
Yes, he's from the city like us.
Yeah, I still, I haven't forgotten my roots. So I love getting out, and I love Los Angeles. We go Dodgers. I that's my team, and I will travel. I just it's something I definitely just I'm really passionate about speaking, especially to the youth. I can get down and I can speak numbers with you guys too. We can talk about retirement. We can talk about savings and protection all day long. But I really like getting out there, and I really love speaking to the youth at the big high schools and that sort of thing, and even some of the colleges. So it's a pleasure to do it. For me, it's a blessing to be able to do it, and it's just something that I really enjoy doing.
Yes, wonderful. Well, thank you again, James, so much for allowing me to interview you and to provide the audience with some valuable information so they can make informed decisions about their future. And I appreciate you so much. So becoming the best possible you